Firstly, experience and expertise. There is a need for professional advisory experience and expertise in this region. Partly because, and this is quite a general statement, there is still some capability gap in the leadership and management of institutional bodies and corporates in and around the creation of strategy and then the operational execution of that strategy. But also partly because the region and its countries are still developing. It's still an evolving economy in this part of the world. And thirdly, partly also because this has been a pretty challenging 12 months, in this part of the world, as it has been for everywhere. But here, we've had intra-regional and geopolitical uncertainty sort of overhanging the region, and an oil demand and price crash, and then a pandemic all landing in perfect sequence. Frankly, you couldn't make it up. So it has been a challenging 12 months. But there's a real appetite to drive the economies of the region forward here, and there's the money, the balance sheet available to do that. But it also needs grey hair, if I can put it that way, and training, development, regulatory structure, professional advisors to land sovereign and economic ambition, and also support the resolution of issues. And this has been the case for many years. I think we would all recognise that. But my observation is that it will continue for some time to come, especially given COVID, and the need to get through the current challenges, and therefore also to deliver the transformational changes emerging from and accelerated by the pandemic. I'll comment on some of the prevalent service lines and practice areas in just a moment. But I did just want to say that this is not a complacent advisory market. The role of the professional advisor is also advancing, I believe, and I would observe. The current environment is very competitive. Clients are more demanding, and noting that technical know-how on its own isn't always enough to further develop relationships and even win work. But a greater understanding of client industry sector and client business is also required, I sense, as well as this, and this is a tricky one, this sort of value add proposition. Fees are a challenge too, back to Richard's piece there on pricing. And in this session, on a regular basis, the Richard's polls sort of, told us very clearly that fees are a major challenge for firms, amongst one or two other things, including brand differentiation, and back to pricing as well, I think, on that too. So there is a real sense here of the bar being raised in terms of what's expected of advisors. And actually in the banking sector, we recognise that too. My role, for example, is to support my colleagues in the region in understanding the sector and client needs as well as possible, so that we can be as relevant as possible. So experience and expertise is a standout characteristic for me, and definitely an opportunity for this sector in this region. But secondly, I just want to talk about legacy relationships. Legacy relationships out here really matter, and this one really interests me. The best known advisors are not always from the biggest firms out here. The family legacy of some firms, many firms in fact, as well as the legacy of long established individual advisors, means that the big firms don't always win the biggest mandates. The award of government mandates, and there are many, it's the significant client in this part of the world. The award of those mandates and high profile roles that in other jurisdictions that I've worked in might be made to the best known brands or the biggest firms, does not always play out in the Middle East. And so the advantage of well-established players means that they have a profile and are well known by influential decision makers in this market. It's a relationship and trust point, I suppose. But what it means is, and apologies for the clumsy language here, but what it means is that firms with a family legacy or with an established advisors can punch well above their weight in this market. The third point, and Richard asked me to talk about this specifically, so I'm just going to give you our perspective on the sector and how it's performing during COVID across this region. And And the sector has largely performed, I would say, better than expected so far this year. But change has been, accelerated. That won't surprise you. Digital and ESG and sustainability have come rushing up the leadership agenda for sure. And planning scan horizons, of course, have reduced from 3 to 5 years to anything from 3 to 9 months. And as one managing partner put it recently on a discussion panel such as this one, we've really delivered 10 years of change in one weekend. So, we all know it's been challenging. But to this last point, I would say, looking in, that the partnership model has performed and responded well to the challenge of these last few months. Costs to me look to have been reduced and people retained in the main, and work has been consistently delivered from people's homes. So that's very impressive. I mean, work has been driven by practice areas and service lines such as employment, disputes and arbitration, restructuring advisory, transformational change strategy. But M&A and litigation will continue to increase in terms of its opportunity for the sector going into 2021. I mean, this part of the world, disputes and arbitration are kind of the core bread and butter offering of any law firm. And restructuring advisory is advisory. The legal processes that we see in other jurisdictions aren't really fully developed here. And M&A actually is, we reckon in certain parts of the region is probably up 25%, driven by big deals, but actually we'll see more of this. Talking to advisors in that space will increase even further next year, largely driven by the availability of cheaper assets and the dry powder that's out there in the market to invest in that. So work in this region has also been driven by the continued investment over the summer. So there was still a lot of activity over the summer, country visions, key projects, and critically, clients have been paying, but probably more slowly. So this compares positively to earlier crises in the region where that wasn't happening, and there's been consistent cash flow, which obviously as a bank, we're really delighted about. In the main for a professional services firm, and a real laser-like focus on collecting payments too. I think I've seen more focus on that than I've ever seen before, and as we all know, this is an area of challenge for firms in this sector, generally speaking, and I think we've talked about that before in this session, Richard. But I also note some optimism in the sector coming out of the summer period, partly driven by better than expected income picture. I think where firms probably are looking at flat to minus 10% 12-month rolling income performance, which is a big improvement on the negative 30% that was expected in March when everybody was looking at what was happening in Asia. And of course, this does mean that some firms have performed better and some have performed worse, and there's evidence of both of those. But generally speaking, and this is an optimistic viewpoint I'm giving you here, that the sector's actually done better than expected, and is probably enjoying a sense of both relief and optimism along with me. Just a couple more things to say around performance. Firstly, firms and their technology clearly adapted quickly and well to the working from home obligations. Many firms have returned to paying partner dividends or some partner dividends. And returning staff to full-time work and full-time pay. So that's a big step back to a new normal, if you like. And the expectations around use of office space in the region, I think, are generally similar to the UK, probably well ahead of the US, where it's quite a negative picture. Although some firms I note have already got 80% of their people back in the office, as is in the case in Asia. So it will vary from case to case. And then finally, other areas for optimism, they're also there. I mean, there's a tremendous population growth trajectory forecast for the next 20 plus years. Strength of balance sheet, that dry powder to invest, will be around for some time to come. And the planned investments in country visions and investments in moving away from oil and gas reliance to renewable energy and the green agenda are all out there. But there's no doubt the short-term outlook remains challenging.